Today, I want to break down what it takes to be a successful dividend investor and the things you probably don't know you should be actually paying attention to. So let's jump right into this. Welcome back, passive income investors alike. Today, I want to show you something I don't talk about a whole lot, but I think is crucial to all dividend investors, and it's something a lot of dividend investors don't talk about. Now that tax season has finally come to an end, earnings season is here, and a lot of stocks have been high-flying, and companies like 3M have been tanking, and there isn't a lot of value investing going on lately because, well, stocks haven't been cheap or at a value worth buying because of these insane rallies, which is leading a lot of people to think that there's going to be some kind of a pullback in the non-too-distant future, which is really hard to gauge. But at the same time, when I'm looking at some of these ratios, and like I've mentioned, I'm not buying a whole lot of stocks. I briefly purchased some MO, Altria Group, and BTI because they just haven't come close to recovering yet. I want to show you guys something that I think is more important to dividend investing than just looking at these stock picks and things you should be paying attention to outside of the market. I want to show you a chart. I only started making charts about 2 years ago to keep some kind of a reference on where I was, where I'm going, and what my averages are. And I'm going to show you this chart up here right now. This is a chart that represents my income for investing. It isn't my income for my businesses. It is just strictly over time how I've been contributing and what the overall growth of my dividend portfolio has been from my own personal contributions along with the growth and dividend payments that I have been getting. Now, the reason this is so important is because this is going to help you gauge and understand what direction you are going in and how to basically properly evaluate your goals, because your goals need to sit within some kind of median that is understandable. So you can see in the early days, the day I started making this chart is when I actually just bought my Charger, and I paid about 10 or 11,000 for that car. And you can notice that I'm kind of like Dave Ramsey. I don't like buying things I can't afford. I did something Dave Ramsey probably wouldn't approve of, but because I had the money to pay for the car up front, my mom recommended, you know what, why don't you just invest that money, use my line of credit at whatever it was, 3 or 4%, and just pay it off over the next few months or whatever. So that is actually what I did. I took the money, I invested it, and then every dollar I was making, and it took me, 10 or 11,000, putting a decent chunk of change toward that car every month just to get it paid off, literally stagnated the growth of my portfolio, which is why we can see when we buy things that are expensive and when you have to pay debts off, you're going to notice you're not going to get a lot of growth out of your portfolio. Really valuable learning and lesson, especially when you can see it consistently, which is why you should make a long-term chart so you can understand the dilemmas that you're going to have and the upsides as well. Which leads me into a company like Canopy, which was one of my highest risk companies, one of the first stocks I ever bought, but it took my portfolio into the stratosphere because I made like $20,000 or $30,000 off that trade over time. It was a stupid amount of money in such a short amount of time, and that is what propelled my entire portfolio into the future. And then lately we've been kind of stagnating. As we all know, 2018 was a bit of a flat year, but it was one of the best performing years I had just for my own personal contributions, which you can see I've actually labeled here that my stocks didn't do much, but because I was contributing constantly, I had an incredibly steady growth up till now where it's been kind of stagnating. Just kind of list the big portions of why my portfolio might have been stagnating, whether it's been market drop, whether I was traveling, because there's a little thing there where I put that I went to Vegas, which took back, an extra few thousand that could have been invested. And I like seeing this over time because it really allows me to get a reference on where I'm going, where I was, and what's going to happen in the future. And I also do this with my dividends. Every month, I only recently started doing this about a year ago, where I started marking down my dividend increases month over month just to see what kind of projection I was going to have. And this really helps you also project into the future when you go to make future decisions, how it might impact your chart. And I find this information super useful because essentially it gives you an education on you, because if you can't see this stuff visually and you can't experience it, have you ever heard the saying, out of sight, out of mind? This is just something that simply help you keep you on track, guys. And I think it's something that a lot of people should be doing, but they don't, and then they wonder why they're not headed to where they need to be. You need to see where you were and where you're going and everything in between that structures that, because it's really going to help you gauge everything into the future. And I want you guys to let me know in the comment section below, how do you chart yourself? I know I show a lot of charts on my portfolio, but those are my performance charts. They're not my actual, what I would call my real chart. This is what I call my real chart. This is my growth chart. It doesn't matter if I have good performance, because if I'm spending that money that I'm making anyways, and I'm not really making any equity, or my underlying assets aren't going up, or my dividends aren't increasing, I don't feel like I'm achieving what I need to be achieving to get to where I want to be. And I think this is a super healthy thing for any dividend investor. Even if you are a growth investor, I think these things really, really matter. Now, I want you guys to let me know what you think about this recent earnings season in the comment section below as well. I've noticed that a lot of companies have been high flying ridiculously, and then there's a lot of growth stocks like Tesla that have been tanking, and a lot of dividend stocks like 3M that have also been tanking. But in the long term of things, I know so many value investors that are just sitting on the sidelines right now. I am still investing. I'm always investing. If the markets crash, that would be a great day. I would just take my operating income from my business and then re-inject it into my stocks and keep averaging in over time. There's only a few stocks that I'm looking at buying right now, and that's GEO Group. I've been looking at a lot of REITs because some of the REITs have been suppressed. There's a REIT, Iron Mountain, I talk about a lot. I find a really interesting REIT that has been really suppressed lately. But other than that, I'm not pulling the plug on anything yet. I will be buying GEO Group literally the next few days as my last dividend payments come in, just because it's been really suppressed. It's really down from my buying highs. I'm not going to buy a whole lot of it into the future. I'm trying to get the position to be somewhere around $7,000, and I'll probably leave it there for the time being. But other than that, I'm not 100% certain. I'm just going to start collecting some cash and saving it up and just waiting. I might even set some drips back up because I just don't know what to do in this market right now. Things are all over the board. We just reached all-time highs on all the markets all over again, and it was something that, and every time this happens, people tend to get a little bit more fearful. But I think in this day and age, I think at this time in the market, people have a right to be a little bit more hesitant considering the massive correction we saw and then the immediate comeback. And if you didn't take any advantage on that drop, well, everyone's been telling you should have been buying, not selling. I remember there was a hedge fund manager that sold Facebook at like 170 or something, and like just laughing at him right now because he sold it at the bottom. And I just think it's wrong to do something like that. You don't sell stocks when they go down. If you go on the Tesla forum right now, everyone's saying sell the stock, sell the stock. That's the exact time you should be buying. I think if you bought Tesla stock right now, in the long run, you're probably going to be doing a lot better than if you were when you were buying it when I was, because I was buying it at all-time highs, and that was a mistake, clearly. You always want to buy those dips. There's usually some issues with the underlying fundamentals of the company, but at the same time, you guys really need to take your time and just wait and be patient. And like I said, this is something I have a hard time doing. I can't be patient with my capital. I always have to be redirecting it somewhere, which is why I'm glad that I work and I'm constantly doing things, because if I didn't have a maintained cash flow, I would have no cash on the books whatsoever, because I just can't stand seeing money sitting around. It's like a weird dilemma. It's like I'm an addict. I have to be spending all the time. But for my job, I gotta get ready for my jobs this weekend. But I hope you guys enjoyed this quick Friday video. Again, stay cool, guys. I love all the new subscribers. I can't believe how fast this channel is growing. So stay cool, stay awesome, guys. I look super forward to talking to you. Probably on Monday. It's a busy weekend ahead.